Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as I go through it. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So I'm going to dive right in, take a look, see what people are sharing, share my opinions with it. So let's see what's going on. If you want to follow me, it's at Finance on Twitter. And if you want to join our community, finding-value.com, I dive deeper into all of these subjects and topics looking for investment opportunities. I share those opportunities with people in the community. I share them looking at charts on the midweek updates. I also have been going through the presentations during the question and answer sessions for some of the companies and sharing my opinions with them. So I've been doing that. We'll continue to do that so that people become more familiar and a little bit more comfortable with the companies that they own, knowing what they own. And that, I think, is important in order to have the conviction to hold on to it. So Patrick Karam, so I'm going to go down two here because I've responded to this one. He said, basically, Andy, are we at the top yet? The pumping for Bitcoin is next level. There's a lot of pumping going on in crypto in general. The way I invest is different than the majority of other people. And when you try to create a YouTube channel, it's very difficult because I'm going to be talking about my viewpoint, which is going to go against the majority of the herd. So when things go up, people jump on train and then they want you or me, whoever, to believe in their viewpoint. And then they'll use the most recent price moves to get them to try to influence other people that their viewpoint is correct. So Bitcoin has been running for a while and people are very bullish on it. And this is the type of sentiment that turns me away from things. I want to buy when the sentiment looks like garbage. So are we at an absolute top? I am not exactly sure. I don't know how to value Bitcoin. The chart itself, if I were to just look at the chart and do my own charting on it, I don't think Bitcoin looks horrible. I mean, we've had a pretty big move higher here. We've broken out of this pattern here, this consolidation flag pattern. Now, it gets as you go up. Here, I'll just describe it like this. This is the way that I view Bitcoin here. We had this double top here. It pulled on back. Your entry point is in here. As you go up, your risk goes up. So would I buy up here? No. But does that mean it? Does it mean that it can't go higher? It doesn't mean it can't. It can still go higher. I'm not a buyer there. So if I were to do this on logarithmic, you want to look for patterns where things break. So what I would try to do is you look for a pattern where things top. You generally get an upward facing pattern. This one's downward facing to some degree. Sometimes they're upward facing. This one did a false breakdown. Here's your buy if you can get it. If you can get it down there, that is your purchase price in the 3,000, 4,000 range as this comes back up. That's your lowest risk, highest return area. It came up, flag pattern, and then broke out. And what occurred here is we did the same thing. We did a double top. Generally, you come up and it's an upward facing flag. Upward facing flag. You come on down and you consolidate here. Your buy point is in this big green candlestick there. And then you ride it on up, your flag pattern, and then we could go up further than where we are today. Totally possible. The problem is, I don't know how to value Bitcoin. I don't know what the fair value should be. There's no margin of safety. You're working 100% off of charts. And then also, This here could easily top out and turn down for any reason. So I don't have any conviction to hold Bitcoin myself. I just can't do it. I can do the charting on it, yeah, but this is highly correlated to the Nasdaq, and the Nasdaq might have a little bit more to go. I think we're in a potential bubble here, but we've been continuing to move higher, so Bitcoin I think can move along with it. Where I get afraid is that we will probably at some point turn in the Nasdaq and go sideways like this for a good decade plus. So this was the peak in 2000, and it didn't break that peak here till 2016. So I think whenever we do make the peak, it's going to roll over and go sideways for a long time. I think Bitcoin's going to do the same thing as what the Nasdaq will do. So when I was looking for some data here. Patrick, I think, has the same type of thought process that I do. He says, can somebody please explain to me how a national Bitcoin reserve would work? What happens when the price goes down over 80%? What happens when price goes sideways for 10 or 15 years? And that's exactly what I think could come because, bear markets still exist and Bitcoin tracks the markets. And that's what he's got here. Bitcoin tracks the S&P 500 or the NASDAQ, which is even a better tracker. I think that we are going to go sideways or lower, much like 2000 to 2016, like I just showed you on that chart. And Bitcoin has only existed during the bull market of the S&P and the NASDAQ. And that's where I get real wishy-washy on, because it's like, guys, this has only existed during the good times. What occurs if we get a nasty pullback in the NASDAQ and one that lasts for a decade plus? Is Bitcoin going to track the NASDAQ, which it has been doing? Or is it going to break apart? No one knows. And here's another one from Patrick. He says, it's official. Once again, stocks are in a historical endgame bubble. Don't say, I didn't warn you. And he says, it's official. U.S. stocks are in bubble territory. Of course, we have these big turns. And I think we have another, they call it a capital rotation event, which I completely agree with, of 2024 crypto and AI bubble. Now, is this the exact top? I can't tell you that. I don't know. I don't think anyone knows. But when it does turn, generally what you see is you'll see energy and precious metals start to outperform the NASDAQ and S&P 500. That's the capital rotation event. And then you see a sideways move for like a decade plus in those investments. And I think that's coming. So I don't know if we're at the total top, but yeah, there's a ton of positive sentiment in Bitcoin right now. Charlie Munger says, no matter how wonderful a business is, it's not worth an infinite price. We have to have a price that makes sense and gives us a margin of safety. That's the value versus the price. And that's where Bitcoin, no one knows how to value it. No one even knows what it is. I don't like it because it's a bad design. So I think it will fail because of the design of it. It's not like gold. It's not like silver. Those are elements on a periodic chart. People will say Bitcoin is digital gold. Well, why did they choose digital gold? Gold is defined by the number of protons and electrons it has. Same with silver, which is different. How does electronic anything compare to anything in the real world? It doesn't. So it's all a marketing scam, in my opinion. So they probably talk about, it's a store of value, but that is a self-perceived store of value that humans have placed on Bitcoin in only one market condition over time, over a short period of time. I mean, I could say that digital gold is to Bitcoin as Bitcoin is to used condoms. And someone would say, well, what value is in a used condom? Exactly. There is no value in it. No one wants to put none. It's disgusting. My whole point that you could draw parallels, the same thing between both of those. Oh, well, gold stores value. Well, I mean, we don't know if Bitcoin's going to be a long-term store of value. We don't know that. So here's another one. It only takes one moment of overconfidence, distraction, or sloppiness to undo a lifetime of painstaking compounding. And that really what that means is that something can happen where you mess something up, you sell at a really inopportune time, then you don't get back in, or something on the lines of that. Ray Dalio says markets taught me humility. Obviously, no one knows exactly what's coming, what it looks like, and they can't time things perfectly. So I think that leads to a lot of humility, is that you won't get it right. Valena says securing long-term LNG contracts from Qatar is of existential importance for the EU. Otherwise, Europe might face another energy crisis given the reduced Russian pipeline gas. So what's going on with Qatar and EU? EU is forcing Qatar to these like stupid requirements with emissions and carbon. And it's like, why are you forcing them to do it? Why don't you? I mean, if you want the gas, then take the gas. Why are you trying to force your ideals onto your trading partners? I mean, if it were me and someone were to, sit there and try to force, I'd say, you know what? Take a hike, buddy. Take a hike. Go find your LNG from somewhere else. Good luck. Luke says Michael Saylor is an idiot. He lost money. I'd debate him, but he's a coward and wouldn't show up. I'm trying to save people. Bitcoin is a scam. I tell you the truth, nobody else wants to say. Richard of 2022, and I guess this is James Schuler going down there, but that's Luke's opinion. Now, I think it's also a scam. I don't like it, but yeah, but there's a lot of people talking about Bitcoin right now. It's all over the place. My feed is people nonstop talking, and this is what they say. It's not about, when I read the feed for silver or gold or oil or whatever it is, they'll say, you know what, we've got a deficit coming. Where are they going to get the silver? Because it's needed in industry. Hey, look, shale oil is about to peak. And then they talk about potential peaking of shale oil. They talk about the fundamentals. They talk about all this stuff. I don't see people saying oil is going to go to $200 a barrel. I don't see anyone saying that. But you know what I see for Bitcoin? They don't talk about any of the fundamentals. All they talk about are two things: a Bitcoin reserve with these countries and some ludicrous of value like $3 million, $1 million, $10 million. Like all of these really high price projections are just in the bag. They're just in the bag. Oh man, I can't imagine when Bitcoin pulls back from a million to, $800,000. It's like, guys, calm down. Like you're at like 100 grand. That's great. It's gone up a lot under one market condition. What happens if this changes on you? What are you going to do? And the fees could get absolutely astronomical on you. So yeah, it says if you know what happened in 1971, you understand why this is happening. And I bet you I understand, in my opinion, what happened. My guess is he's talking about the gold standard. Now, there's something else that a lot of people don't talk about. And this is the fertility rate, children per woman going down. But this is what I think it might actually be. I don't think it's that we went off the gold standard. I think what's going on is that the per capita energy consumption use is declining. And that is wealth. Your wealth is declining because your energy per capita is declining, which is wealth. It's a measurement of wealth. So that's actually what I would say is the problem. And it's gonna decline rapidly at some point, in my opinion. Coming down to David Murrin, he says the next commodity surge has commenced. We believe that the commodity sector is now at the start of one of the biggest rallies in 56 years, with an expected peak between 2025 and 2027, as recently explained. And he does talk about oil, copper, corn, silver, gold, commodities in general. It's coming. And if you were to look at this, what he explains is that wave two is done, and we are entering wave three, which is the largest leg of the move, is what he talks about. China property sales are tumbling. Well, you know why? Because their demographic fell off a cliff. And if you were to look around the world, best demographic for investments is India. India has a lot of young people in their demographic. They're having kids, and it looks more like a growing, healthy country in terms of demographics, the population movements. China recently had people of home buying age fall off a cliff in terms of the number of people, the number of families and people. And that's what's causing this big move lower. If you want to take a general rule of thumb, generally you get a crash in the real estate market, at least if the demographics are okay. And it takes about 5 years from the peak. So you take the peak, which is about 2021, and you add 5 years, and that's generally when it will bottom. So it'll probably bottom sometime in late 25 or 2026 for their property market. That property market is a driver of credit and inflation in the system. Credit and inflation in the system is what drives a lot of these economies. That's your demand. Tracy says green hydrogen goes from hyped to humbled on eye-popping costs. A raft of projects to produce green hydrogen, a fuel billed as critical to reaching net zero, has been abandoned this year as expectations for tumbling costs failed to materialize. There's been a reality check in terms of the costs that hydrogen projects entail. The industry has overpromised and underdelivered. It's only natural that there's a sort of swing back and a natural cooling of some of the excesses that were promised. This is new hydrogen project announcements, up, 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 boom, down in 2024. So Jim Cramer says, should working people buy more stock? Donald Trump answers, well, I don't want to get into a situation and we have a dip or something, because that can always happen. It's almost like he's telling you what's coming. I wonder if we're going to get a dip in the S&P and the NASDAQ. Interesting. Hydrogen projects face a reality check on costs. That was what we were just talking about above. Bear porn here, and this is spreads are winding yet again this week with the 30-year yield blowing out and bringing the crucial 30-year, 2-year spread closer to the historical danger zone. And they're talking about the yield curve. As shown on the chart, the last 4 of 4 times this happened since 1990, it correlated with the S&P crashing anywhere from 20 to 57%, monthly attached here below. See daily chart posted separately for granular look at the current bull flag pattern playing out on that spread. The spread is this guy here, the 30-year and 2-year treasury bond working its way on higher and on inverting. So that's what he's talking about, the spread, and it getting to potentially a critical level where we could see a move lower in the S&P. So every time that spread has increased, it increased with a 20% decline here, a 50% decline here, a 57% decline there. We had a 34% decline on this one, and then we have it again. Are we going to see a decline here? And most likely the answer is yes, we will. During that time frame, though, in the year 2000, which I think this is the one that mostly mimics it based off of market conditions, I think that we're going to get a rollover, but oil and commodities are going to go up. That's what I think is going to occur. natural gas inventory is drawing down at the second fastest level since 2012. So this is the current drawdown, minus 208 terawatt hours. The only other time it's drawn down faster has been 2016. The reason it's been drawing down is because they put a bunch of renewables in, and natural gas is now taking up the slack for renewables. So if it's not windy and it's overcast, they burn more natural gas. And if it's cold outside, they burn more natural gas. It's a combination of those two things. And this is the chart of it over time. You can see that drawdown coming back below 23 and 24 within the 2011 to 2023 range. That's nasty bearish momentum divergence for the USD. And it's important to understand what the USD is doing because a lot of our commodities are kind of priced in dollars. The DXY isn't the value of the dollar. It's the relative value against other currencies. And what really makes a big difference here is when the dollar underperforms, the DXY, it shifts money flows in the system differently. That's why it's a big deal. So we would see emerging markets and other areas where their currencies start to appreciate against the dollar or against the dollar. That's when you start to see money flows into those sectors. But we do have a bearish momentum divergence here where we get lower highs and we can't break out of this resistance zone, and we could fall and crash down lower, which then the DXY would crash and fall lower too. We've got oil demand. So oil demand will surge well past 106 million barrels per day in 2025, according to him, which is a big step up in demand if it were to do that. Now, if shale does flatline here, that demand is going to eat through spare capacity, and that's going to push prices higher if that occurs. How would you answer this common Goldman Sachs interview question? Well, let's give it a shot. There are 3 boxes on a table. One contains only apples, one contains only oranges, and one contains both apples and oranges. The boxes are labeled incorrectly. You can pick one fruit from one box, but after that, you must correctly label all the boxes. How do you do this? Well, the only thing I would say, number one, is when the boxes are all incorrectly labeled, does that mean that oranges are labeled with apples and apples are labeled with oranges? And then what do you mean by incorrectly labeled for the mixed box? Does that mean that they label it like with apples or oranges or something? So from the given information, we know that all 3 boxes are incorrectly labeled. So if I choose an apple or an orange, whatever I get out of the box, my likelihood from choosing it from an orange or an apple box, if they're incorrectly labeled, and you only have orange apples labels, then that means I have a 2/3 chance of picking the box that is mislabeled. And if I pull an orange and the box is labeled apple, then that's your 2/3 probability. If I grab an orange from the mixed box and it's not appropriately labeled, there's a possibility that my orange can read orange on the label. So if I chose an orange from the mixed box and it read orange, I know that's the mixed box, and the other 2 are just opposite of what they're labeled, because they said that all the boxes are inappropriately labeled. And if you have 3 boxes, 1 apple, 1 orange, and 1 mixed, if I happen to choose the one either apple or orange, and I choose what the label says, that is the mixed box. If I choose, let's say Apple, but the box reads orange, that means that it could be the mixed box or the Apple box, right? If I choose an orange, or sorry, maybe I said that incorrectly. If I choose an orange and the box reads Apple, it could be the mixed box or the orange box. But since I have a 2/3 chance of picking the only box, that if that makes sense, it's a 2/3 chance of choosing the apples or the oranges, depending what it is. I would choose that if I chose an orange, I would just say, you know what, it's the orange box. And then it would depend on what the other two are labeled. So it depends on what all of them are labeled and how they're mislabeled. Because if you have two apples or you have two oranges and you chose an orange, then you know that that is the mixed box, and then the orange box labeled as the apple and the apple is the orange, if that makes sense. If you choose one, you're going to have, obviously, two of the boxes are going to read apple or two of the boxes are going to read orange. So depending on what you choose, you want to make sure that you choose one of those two boxes that have the other one, because you're just taking the known information and whittling it down. So if you've got two boxes that are orange and one that's apple, you know the apple is orange, so that box is orange. So now you've got two boxes that read orange. You pick the orange out of it, and if the orange is an orange, it's the mixed box. If the orange is an if you pick it and it's an apple, then I would say that's the mislabeled one, and then I would go with the mixed one being the other one, if that makes sense. So the way that you, and hopefully I described this well enough, you want to choose the one that has the two same labels, and you want to pick from one of those, and then you have to decide what you want to do. If it matches the label, that's your mixed box. If it doesn't match the label, then since it's a 2 out of 3 chance, I would just go with the opposite. So if I chose an orange and it read apple, I would say it's an orange box. That's how I would do it. Grady, so the TSX Venture climbed 237% in its baby bull move up from the commodities bear market low back in 2020. During the baby bull, many junior gold and silver companies went up 500% to 1,000%, and we should see that once again. And here's the full article there, and it's coming. It's coming right soon. Breaking. So in the last 4 days, Buffett has added shares of Occidental Petroleum to his portfolio at prices ranging from $45 to $46 per share. This was a stock he had already owned with an average buy price closer to $54. So he continues to average in over these days here, 17, 18, 19 into oil. It's exactly what I would do too. Here we are, and this is where, at least wherever this came from in stockcharts.com, somebody put the business cycle is here. We're obviously seeing bonds go down, but we're not seeing stocks go down. So I do think that the business cycle is here. What generally does well in this business cycle is commodities, stocks, and bonds. We were in that stage. Bonds have been declining here, so we entered stage 4, where commodities and stocks go up together. Now we could be entering where bonds and stocks go down and commodities go up. That's that late stage business cycle move that we could be entering at some point next. A lot of people are trying to call the top in the stock market. They just haven't gotten it right yet. And that's where I've been too. I've been looking for stocks to roll over where commodities get all the juice. But we're still in this commodity stock move. That's stage 3 and 4. Bonds do well in the beginning, and that didn't really work out that well in the recovery phase. The recovery phase, bonds did well. They did well in 2020, And then 2021, they rolled over. So 2021, we entered this cycle here. And we've been in this cycle for probably a couple years. Since I'd say 2021, 2022, 2021. Coming down, Dr. Jim Willie says the final act of the global financial collapse, Bitcoin is the trap. The central banks are drowning the world in worthless fiat currency, creating the largest financial disaster in modern history. Now they're dangling the shiny bait of digital gold to keep the masses distracted. Bitcoin is not the solution. It's the perfect trap for desperate speculators. This isn't wealth creation, it's a rigged game. When the crypto bubble bursts, those clinging to blockchain fantasies will watch their dreams vanish into digital smoke. The real power lies in tangible assets: gold, silver, energy, and farmland. The building blocks of the real economy, which I agree. Ask yourself, why are the financial elites quietly hoarding hard assets while promoting digital illusions? Because they know the truth. Wealth is rooted in what you can touch, not in digital dreams. Bitcoin is the illusion of freedom in a collapsing system. Protect yourself now, convert your wealth into real, physical assets before it's too late. When the collapse comes, the only thing blockchain will hold is your regrets. I agree. And that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We got that discount coupon code. Discount is the coupon code. It's $10 off the monthly membership on the first month only. And you get a larger discount on the yearly membership if you like to sign up for the yearly membership. But that's what I've got for today. We'll catch you next time, guys. This is Finding Value.